Hi, David Duff from Ashton Accounting. Today we're going to talk a little about independent contractors. There's quite a bit of change in the last couple of years on independent contractors. Independent contractors are people that got paid for services, but they were not an employee, which means you have to meet three critical criteria. First of all, the independent contractor needs to fill out a W-9 form. You need to fill these out once a year at the beginning of each year, or whenever you hire the new person. Number two, they need to have an independent contractor's agreement. We have one that we provide for our clients. This meets all the federal and state requirements that they are truly not an employee, they are an independent contractor. Number three, you need to have invoices for the person that was paid for the payments that were made to them. If the state of Florida or the Internal Revenue Service comes in and you don't have these, you will lose, and these people will be treated as employees, and then you'll be charged the back payroll taxes, which again requires you to refile your tax returns for the business and then also the personal. Under some of the new requirements is if the information on the W-9 form that you're filling out is incorrect, the penalty can be $500 per form. If they're sent in late, the penalty could be $500 per form. This can be very expensive. Here's one of the critical things that everybody has to understand. The people that you use as independent contractors or technically employees, they have to be able to work in the United States as a U.S. citizen, either with a Social Security number, a federal ID number. They have to be able legally to work here. If they're caught working for you and they're not meeting those criteria, the penalty can be $10,000 a person. So keep track of the people that are working for you as independent contractors. If they truly are not an employee, which means you're not controlling their time, their energy, their efforts, they can work when they want, whenever they're able to do the work, they provide their own tools. We actually have a 25 criteria list that we can provide to you of the things that are necessary to make sure that you meet that criteria. There are businesses that can use independent contractors. However, if you tell them to work underneath your roof and they're working 8 to 5 or 9 to 5 or 12 until 4 or whatever it is, and they're constant, they're an employee. If they really are somebody that you bring in for occasional work or contract work and you meet all the 25 criteria, they might be able to be treated. This is one of the consulting parts that we do for our services, that we provide our clients the criteria and make sure that they meet them. The state of Florida can audit, the Internal Revenue Service can audit, and for some reason, if the state comes in and they find that there's a problem, you'll be talking with Uncle Sam very quickly. I want to make sure that you understand there's a lot of factors that comes into play. I've got 4 pieces of paper in front of me. It's not just 4 pieces of paper. There's a lot of other issues involved. Please consult with a great accountant or talk to an attorney, making sure that you're meeting all these criteria. Because the advantage of an independent contractor can be that when your company needs extra help, they might be able to hire somebody for a short period of time as an independent contractor. This could be ongoing, but if the person's guaranteed money and they're guaranteed hours, they're an employee. As a quick reminder, making money is great. Keeping more of what you make is even better. Thanks for watching this video.